Hello guys, welcome to another video. So today it's not about market analysis. I'm doing something different. I just want to show you how to locate areas of demand and supply on your chart. So this is something that it's very important for you to understand, because when you're trading, especially if you're trading price action, you need to understand or be able to identify the areas where the price is gonna find support or is gonna find resistance. So that's what I'm gonna show you today. So let's start with demand. So basically demand, that's where the price is going to struggle, find some support, and from there the price would shoot to the upside basically. So where do you find these areas of demand on your chart? So remember, on any time or any day, the price will be moving, going up and down, up and down. So it's very important for you to be able to locate the areas where the price is most likely to bounce. Maybe bounce and go up, or bounce and then go to the downside. So when you're talking about areas of support, this is where you find them. So basically the first area where you'll find the demand, that will be there on your swing low. So basically where the price has turned like this, the fact that previously the price turned here, it shows that there's some support. There's the price found support there. Chances are that even when it comes back, you cannot ignore this, because remember, the last time the price was here, it failed to continue moving to the downside. So this is the first area where you're going to find your support, which is at this area here. So the swing low, that's where you're going to find an area of support. So on your chart, you need to be able to locate the swing lows, because that's where the price is most likely going to find the support. Like if we look at this picture that I have here, we can basically see that the price, it has formed this swing lows, swing lows, swing lows, which is where the price, failed to move lower than this, failed to move lower than this, failed to move lower than this. So it's very important that when you see this swing lows on your chart, and the next time the price moves towards the swing low, you need to understand that this is an area of demand. The swing low, the price is most likely going to find support there and fail to penetrate it and bounce and go back up. So that's the first area where you can find your support, or your area of demand, where the price is most likely going to find support. Yes. So the second area where the price might struggle to pass, might bounce and move up. It's not always the case that the price, when it's moving up, for instance, let's say you are in an uptrend, you are moving like this. It's not always the case that when you want to join that uptrend, you need to wait for the price to move back to a swing low that we just talked about now. The swing low, which is basically the drop, the base, and the rally. So basically that's a swing low. The price will move down and then move like that. That's your swing low. That's the first area where you can find the support or the area of demand. It's there at your swing low. So it's not always the case that you need to wait for the price to go all the way back to your swing low for you to be able to join this uptrend. So because remember, it's very if you want to increase your odds, you need to enter at an area where you'll find other people trying to enter, other traders, or the area where there's a lot of demand, which is where you know that you're not the only one trying to push the price up, which is why if you wait for the price to touch a swing low, that's an area of demand. There's a chance that the price is not going to penetrate that. So when you're buying from a swing low, you've got higher chances of winning that trade than someone who is buying in the middle of the trend. So you shouldn't chase the price. You need to wait for the price to pull back. You need to wait for this so that it can dip into a swing low, or it can dip into an area of support. Find support, then you know that you are starting a new wave. That's how you should trade. So sometimes the price might not go all the way down to the swing low. Remember, in this case, the swing low is here. And if you feel like you don't want to, because you cannot just buy there and chase the price, because already the price is gone. And we do know that the price doesn't always move in a smooth wave like that. Sometimes it will pull back, pull back, pull back. But the goal is to move up, which means you need to be careful so that you do not, you're not taken out by this. So when you want to buy, you should wait for the price to retrace so that you will start a new wave. So, but what I'm trying to show you here is that the price, when it is pulling back and you're waiting, it doesn't always go all the way back to the swing low. Because if it goes to the swing low, we know that it's most likely going to find the support if the price is still in an uptrend, for instance. So that's where the first area where you can buy. But sometimes the price doesn't go all the way down to the swing low. It can form another swing low there. So is there a way in which we can find an entry here, just in case the price does not go all the way down to the swing low? So that's the second area of demand, which is what? So that's a rally-based rally. So remember the first one we said it's a swing low, which is formed like this, where the price will drop, base, and then rally. So that's a swing low. The second one, while the price is moving up, right? Sometimes in between it will stop. Like it will form your bullish candlesticks, but then here maybe it will have one bearish candlestick and then it continues again. So this is also an imbalance. So this is also an area of demand. It's not always a swing low. It can also be that pause there in between where the price is moving up and then it stops and then it continues. When it stops like this, is not when it stops like this, is not like when it's dropping and then continue, because if it drops before continuing, that would be a swing low. Sometimes it will stop there for a few candlesticks, 1, 2, 3, and then it continues again. This can also act as an area of demand, meaning that next time the price drops towards it, it's most likely going to find support today. But now, how do I identify this on a chart? So I'm going to show you a chart now so that we can see this on a chart. So there's the chart that I was using now. And like I was saying, remember, when you're talking about the area of demand, where the price is going to find support, the first one that I showed you was a swing low. It's here, right? This is a swing low. If you were waiting for the price to pull back into the swing low so that you can join this movement to the upside, because we do understand that when the price is going up, it will always have pullbacks, pullbacks, pullbacks. So if you're waiting for this pullback to come to the swing low, I said sometimes it doesn't reach there, which is what I'm going to show you now. So the swing low, it's here, which is also a very strong area of demand. But sometimes when the price is moving up, if you assess this movement here to the upside, you can see that the price was moving up and then it stopped there before continuing. Stopping there did not go back, continue, because if it had went back before moving up, it would be another swing low, swing low, swing low, going up like that. But in this case, we just stopped there, formed one candlestick, two candlesticks at the same level, then we continued again. So this is the pause that I was talking about, to say that sometimes the price, when it is in a wave to the upside, the wave is not smooth. You will see a pause in between before the price continues. So this is the pause that is also an area of demand, which means when the price is pulling back and you're looking for an area to join the uptrend, you must not look past this. This is the first one. This is the second one, areas of demand that you can use to try and join the bullish trend, which is why it's very important for you to be able to spot them on a chart, so that when the price is moving up, you don't just enter in the middle of nowhere, because you need to understand that, like I said, the price will always pull back. So you don't want to enter only to find that the price now wants to go for a pullback. You need to wait for the pullback. When you're buying at the end of that pullback, like when the price has pulled back towards an area of demand, for instance, and then you're buying there, you know that you stand a greater chance of starting a new wave, which means you'll be collecting all these pips, which is going to be more than someone who tried to enter here and then went up and then it cut them out. So you need to understand that the goal is always to buy as low as possible. That's why instead of buying here, why not wait for the price to pull back here, so that you increase your profit margin so that you can collect more pips. So in terms of the demand, if you just recap, the demand, or the area where the price is going to find support, or an area where you can look for buy trades, you can find it at a swing low, right? Swing lows, the swing lows, you can identify them on your chart, or also the market can pause in between a strong rally. When it's moving up, it can form a pause. You can also find an area of demand there. But not every swing low or swing or a pause is going to be the area that is worth your attention. You're not going to trade each and every swing low that you see on your chart. So The groups that I taught, that I mentored, they know that yes, we can identify all of them like this, but we need to be able to assess and pick the ones that are high odds. So that's something that I teach in the mentorship. Now let's talk about the support now. I mean the resistance or the supply, right? So here we are talking about the demand, saying that we can find it at swing low and also at a pause. And I just showed you how to identify those ones on your chart. Now let's talk about the supply. The supply now. When you're talking about the supply, it's just gonna be the opposite of demand, because remember the demand, that's where the price finds what? Support, which means it goes with buying. When you identify areas of demand or areas of support, it means now they go with what? With a bullish trend. So basically the bullishness goes with buying, it goes with areas of support or areas of demand. That's where you'll be taking your buy trade, right? And those areas of demand where the price finds support, I just said it's at the swing low and a market pause. Now let's talk about the resistance, I mean the supply, where the price finds resistance. So this one is basically the opposite of demand. So basically this one, because we had said that the demand, we find it at a swing low, this one you'll find it at a swing high. It's just the opposite. So basically when you're talking about a swing high, because we said a swing low was a drop based rally, this will be a rally based drop. That's a swing high. It looks like this on your chart. So all these are areas of, these are swing highs. This is a swing high, this is a swing high, all of these are the swing highs. So that's how a swing high looks like on your chart. So an area of supply where the price is going to find resistance, the first one you'll find it at a swing high. So basically when the price is in a downtrend, when the price is moving like this, we are saying you cannot just, because the price is moving to the downside and you are trying to join that trend, but you cannot just join or enter in the middle of nowhere. You need to wait for the price to enter a specific area where there's a higher chance that it's going to struggle to move past, then you sell from there. Remember, selling, we are trying to sell as high as possible. So which is why a swing high is also one of the areas or strong areas where you can look for selling trades. So when you're identifying your swing high there on your chart, for instance, and you know that the trend is not yet broken, it's still moving to the downside, when you see the price doing this, you don't panic, because you know that the dynamics haven't changed. This could be just a pullback. It's not yet confirmed that this is a complete trend reversal. So you will wait for the price to move to your swing high, and then you take a sell from there. You're trying to catch a fresh wave to the downside, because if you try and chase the price, you will be disappointed many times, because if you open your chart and you find that already the price is here, you can say we're in a downtrend, but it does not mean you should just try and sell from there. Sell from there, because if you sell there, what if now the price wants to move like this? It's still moving to the downside. Yes, you were right in saying that the price is moving to the downside, but the way you went about joining that downtrend was not the perfect way, because if you join here and the price moves like this, chances are that it could just go to your stop loss, and then you see it still moving in your direction. So to try and avoid being taken out of a trade where your prediction was correct, you just need to be more patient and wait for the price to pull back towards a safer area before you can join in. So the first area for you to take that sell trade, where the price is most likely going to find resistance, is at a swing high, and I just showed you how a swing high looks like. The second one would be a pause. That's another pause, but now the difference between this pause and the one that we spoke about under the demand was that, because the one that for the demand, the pause looks like this, is this one. It is formed when you're going up. It is in the middle of a move to the upside. It's here in the middle of that move. So when you're talking about a pause of a resistance, is the one that you will form when you're dropping. So basically you're dropping, swing high, but sometimes you don't form a swing high. What do? You just move and then you stop. So like you move, you stop, and then you continue. So this is a pause that is formed when you're dropping to the downside. So you can also take that as your area of supply. where the price is most likely going to find resistance and then struggle to move past that. And you can, if the price is still moving to the downside, the trend is still bearish, you can look for your sell trades there. So basically, an area of demand and an area of resistance, area of supply, these are the opposite of one another. You just need to be able to locate them on your chart so that when you're looking for buy trades, you know that you are leaning towards what? This side. You're leaning towards demand. So you need to be able to locate your areas of demand, and you need to be able to, when you're locating them, you just need to know they're at a swing low and at a market pause that you formed during a strong move to the upside. So that's how you locate them, and which means you're only interested in taking buy trades from there because the trend is moving to the upside, right? But not every swing low and every market pause is worth your attention, is worth trying to take trades from. You need to be able to assess that, which is what the guys that I just mentored, I showed them how to assess them and only focus on the ones that are much stronger, so that we don't always go in each and every time. We need to wait for the perfect scenarios so that you increase your chances of winning. When it comes to supply area, when the price is moving to the downside and you're trying to sell, these are the areas where the price is most likely going to find resistance. It's going to find resistance, which means it's going to struggle to move past it. This is the area of resistance. When you're moving towards it, you're going to struggle to reach the other side. So you're going to take a sell trade from there, because we know that areas of resistance or supply, the price doesn't break easily, especially when the trend is going to the downside. So which means to increase your chances of winning, you need to join that downtrend by taking sell trades from those areas of supply, because the price has got higher chances of finding resistance there. So basically, that's how you locate your areas of demand and supply. Just go on your charts and identify these areas, like they are everywhere. I just showed you here with the demand, which is this one here. That's your demand, and you could have had this as your supply when the price was moving to the downside. Because of what? We're moving to the downside, we stopped there, we continued, then we went back. If the trend was still moving to the downside, you could have searched for sell trades there. So just go to your charts and locate the swing highs, swing lows, and market pauses, and just see how the price reacts from them. And remember, the high odds ones are the ones that are on a higher time frame. So the structure on a monthly looks better than that one on weekly. The structure on weekly looks better than the one on daily. So someone that trades on daily will see these areas perfectly, and the price has got higher chances of reacting there than someone who's trading on M1, because there's a lot of volatility, so the price can throw you off there. But when you look at it on a bigger scale, just go and mark them on your chart, and when you're taking trades, make sure that you identify these areas very well. You decide where the market is going and only focus on the zones that go with that trend. Then you will see that you're going to increase your chances of what? Of winning those trades. So that's basically what I wanted to show you in terms of how you locate areas of demand and supply. So if you enjoyed the video, make sure that you subscribe if you haven't done that, and like the video, and also share so that it can reach more people. So I'll see you guys in the next video. Thank you.